Hey everybody, this is Jose Blasco. We are about to get started in just 20 seconds or so. This is a sound check. Can I have a quick confirmation that you hear my voice? A quick message on the chat box would do, a quick hello. That would be great. And that way I know we are ready to get started. You hear me, you see me. So we're good to go. I'll turn on the video stream as well so I can say hello here from the bottom right corner of the screen. Very good, everybody. So that's it. We are live. Thank you for the confirmation. Mark, how are you, my friend? Good to see you. Great to have you all. Today is October 8, 2020. We are getting together for a little bit of longer term trading. So typically what we do in these sessions is to go ahead and look at the options markets. We look at identifying opportunities to trade directionally, to trade non-directionally. And again, whenever we see opportunities that meet our rules, then we are ready to execute. And if the opportunities are not good enough, they don't meet our rules, then we move from market to market. To save time, we also use the TradeStation scanners in it to load symbols automatically. So we save time in the analysis process. But again, while we save time in the analysis process, we are absolutely rigid when it comes to taking those trades, meaning that if they meet the rules, we take it. If they don't meet the rule, we pass. It's that simple, okay? So today we're gonna continue with this plan as always, and good to see you, Fairmont. And we will be looking at the markets and finding those trades. Okay, so quick animation here for the disclaimer. Let me maximize and highlight the disclaimer so you can read it carefully. This is important information, guys. So please. Read every word so you are well aware of the risks associated to trading. Probably you are, but again, it's important that you read the disclaimer carefully. Cool. So the session is now officially introduced. I would like to now move into TradeStation and begin our analysis, our planning, our review as well. I want to review trades that we have from before. Reviewing trades is normally very helpful for two reasons. Number one, if you are in those trades, you may get some guidance that is important to you by talking about trade management, if you wish. If you are not in those trades, looking at prior trades that we have planned is going to help you understand better the type of trades that we are looking for in the session, especially if you are newer to the session today, or you're watching this recorded and it's the first time for you, or you are newer as well to our channel. So that way, you get to understand better what we do, because then later, the market is trading, so we want to move fairly quickly into those trades. While I spend some time explaining it, certainly we want to minimize that amount of time to be efficient with the markets, okay? Very nice, very, very nice. Okay, so let's begin. First thing to be said here, the S&P. So we have the SPY ETF. Looking at it, we can see today it's trading up. Not only it's trading up, we got green UFOs below, no red UFOs above. So again, it's looking like a pretty powerful market at this moment in time. We gotta be careful with the S&P in the sense that we've been in this climate for 8 candles already in a daily time frame. Statistics suggest that 11 would be the amount of candles in that direction. So we may be continuing the movement to the upside for a few more days, but then we may see a reversal, okay? So careful with that for the ones of you looking at the market, especially from a longer term perspective, okay? When it comes to understanding options in the market, a very useful tool is to look at the VIX, which is the implied volatility for the S&P 500 index. So in other words, you get a nice measurement of the prices of options across the board, right? And today we are dealing with options that are trading at a 27 level VIX, which again, if we look at this, if I was to go back, let's say a daily time frame, for example, so 27 VIX, it's certainly not a low number. It's certainly high than the highs of the last year, right? So 27 is right there, and that's a pretty powerful number, okay? So again, we should find a decent amount of premium available in the options, even though the market is going higher, and normally the markets, cool down, the options shrink in value as the markets go up. Typically, fear goes away. When fear goes away, there is less panic to buy those options, and therefore the prices of options drop a little bit, okay? That's the effect of implied volatility, at least the typical effect. It's not always like that, but most of the time it is. And in this sense, you would expect a bit less premium available today. Notice the VIX is down by 2.53%, right? Because the S&P is up. But still, we are still looking at 27 values, and certainly I would anticipate, I would expect, decent premium out there. Okay, so while I have prepared my scanners and I have directional opportunities ready to be seen, I would prefer in times like now, and this is, by the way, kind of like a normal thing in 2020. Okay, the whole year has been like that, kind of. I would prefer to begin with non-directional trades or neutral trades, because those are going to be credit opportunities. And credit opportunities means that we're going to be selling options, collecting that premium, and letting time pass and benefit from time passing while stock either stays the same or move in a specific direction or stays in a range, depending on the strategies that you use. Okay, instead of being purely directional, because let's face it, the majority of stocks in the market right now got very expensive options, and getting directional means that you're gonna buy options that are very expensive, and it's a bad starting point to start with an expensive debit. You want to have an expensive credit, that's nice, but not an expensive debit. Okay, so again, so I want to start here from the non-directional trades, but before we do that, let me review the trades that we have. I will load Option Station Pro as well, so we can look at them. So loading Option Station Pro. Here we go, almost there. And I'm gonna move into the Manage tab of Option Station Pro, so we get to see a few trades I have there. Well, there are a few trades actually. There is a trade on this is a future trade on the Euro futures, but the other two trades that we have here are trades on options. Okay, so anyway, so let's take a look at those trades, but also look at the charts. And when looking at the charts, I'll start with Nike, and this is a trade I've been commenting on for a very long time. I think it's a great example, even though it's a trade that totally turned against us. Absolutely moved against us all the way. Our entry point that was defined there on July 10 was to short where the purple line is. So we entered this trade buying puts on Nike, expecting the market to fall. It did for a little bit, and then next thing you know, turn all the way. Look at the move against us. It's absolutely tremendous as a move against us. But what's the good news in options trading? Well, if I look at Nike, okay, what we did was to buy a put. And we still got 8 days to expiration. Okay, so that put is almost gone, okay? But we're still 8 days into this game. And when we bought this put, okay, we paid $3.85. And what's the beauty of buying options, okay? Which, by the way, at the time when we did it, they were cheap. They were not expensive. It's not like now where they are very expensive. But at that time, we paid $3.85 for that put. And the beauty of that is that when you pay $3.85, what's the most you can lose is $3.85. And that is no matter how far the stock goes against you. Okay, that's what it is. So in other words, we got into this trade. The stock went all the way against us. The real-time P&L, as you can see, it's almost the full loss, which is 385. It's still showing 383. Why? Because we still got 8 days left, but it's almost a guaranteed full loss that we're gonna get on that one. But the beauty is that no matter how far it went, the most you can lose is 385. That's the beauty. And the other side of the beauty is that when you run your portfolio and you run a few positions in parallel, while this trade was working against us, other trades were working in our favor, and since July we closed many trades that were long trades for a profit. While this trade was working against us, other trades were working in our favor. So in other words, you may want to think, and this is exactly what it is, you may want to think of Nike as a hedge for the other trades, or you may want to think of the other trade as a hedge for the Nike trade if the Nike trade had worked, because then the other ones would have not, typically, given the correlated nature of the stock market. Okay, so again, this is an example of a losing trade that we are reviewing. The next one is FISV, okay, which is a non-directional trade. This is an iron condor that we set up. That was August 27. We used October 16 expiration date for this trade. The earnings when we planned the trade were November 4. Earnings are now pointing at November 3. Now earnings are pointing at November 4. So it seems that there's been a change of the date for earnings. Doesn't matter, because we're going to be out of the trade on October 16, which is before November 3 or November 4. Okay, so October 16 is next Friday. So in other words, as long as we stay in the purple box, we're gonna be profitable. And given the amount of time left to get to that vertical line, which is next Friday, we only got basically 1 week and 1 day left. So it's looking like, unless something absolutely crazy, this trade will end up as a complete full profit. Now, something to keep in mind with trading in general, and certainly with non-directional opportunities, is that you could approach trading in 2 different ways. Okay, and I've said that before. You may have heard me say that before if you are in the sessions regularly, which is, one way to approach your trades is to just set up the trade and just wait until the end. So in this case, wait until October 16 and do nothing, knowing that the most you can lose is limited, because an iron condor has a limited risk profile by definition. So just wait, and it's either you lose the amount that you were ready to lose, or you profit the amount that the iron condor is paying you. And that's a valid way to do it, even though it's not the most efficient way to do it. It is indeed a valid way to do it. Now, of course, doing maintenance in the positions, doing conversions of the positions, getting into damage control mode in case a trade goes against you. So all of those are complex strategies. And at the moment, I'm not discussing it in the channel. There are some videos recorded on the sharpening playlist where you can see some videos titled as damage control or gamma hedge. So go ahead and take a look at that, because it may help you to understand certain things that you could do. But right now, the way I'm dealing with those trades is basically you take the trade, you close your eyes, and that's it. Okay. So in this sense, I'm going to close my eyes until next Friday, October 16, and then we'll review and see what happened. Okay. I know that many of you are in these trades, and a classical rule that is being utilized in the industry when doing credit strategies, could be credit spreads, could be iron condors. Classical rule is that you close those trades for half of the profit, for half of the credit. So certainly, you will be out of this trade already for that profit. Okay. Same would happen with SPG. So SPG is a trade that we took in September 4. That was more recent. Expiration is October 16. So we're still in this trade. So right there, just waiting for this to happen. And we are well positioned in, let's call it, quite close to the middle point of this purple box, and therefore it is indeed looking like, with UFOs above and below, that we will end up in the range in the purple box until October 16. Is looking very good. But again, you could have used another way on how to exit the trade. You can see SPG, it's paying $69.5 right now. When I did this trade myself, I collected $76 of credit. Right now, if I close it now, I'm going to make 69.5. So one very valid option would be to close it now, because if you think about it, I made already almost the whole amount of profit. And if you think about, how much money, additional money you would make if you were to stay in the trade, okay? So from 76 to 79.5, you are talking about, how much is that? $6.5, right? So you are talking about, I'm going to make additional $6.5 if I stay in the trade another week and 1 day. So my question to you is, if something crazy was to happen, let's say some crazy news shows up out there related to Trump with the coronavirus, and the market goes absolutely crazy, and now these iron condor end up losing, well, basically you were exposing yourself to this type of risk just because you wanted to make additional $6.5 in 1 week and 1 day. I would say, how much money is that per day? It's just a few cents a day, so it's not even worth it, isn't it? So again, a classical technique would be to close the trade. I'm not going to do it again because of what I said, where I'm executing those trades kind of like closing my eyes and holding it all the way to the end. So you get to see the whole process all the way to the end, while it would be certainly wise and valid for you guys to close those trades ahead of time, okay? Beyond meat, it's a trade that is being challenging. Okay, notice that this one is a trade that is not working well. So we planned this trade that was September 10. Okay, September 10. So we've been in this trade for like a month. Okay, and everything was good. Okay, we spent all this time in the purple area. Actually, if you had looked at the P&L at that time, you could have closed the iron condor for half of the credit collected. You could. Okay, but then that stock picked up direction and now is actually outside. Okay, yesterday and today it's outside of the purple box. Okay, and that's a problem, and really it's a problem because there is no red UFO. Okay, so if there were red UFOs right here, So you will be like, okay, it's a problem, but what's likely going to happen with the red UFO is that it will bring the price back down, and when we get to October 16, we have a chance to be inside the purple box. What's the problem? There are no red UFOs for that stock because that stock is making all-time high. So we do have a problem, and this is one of the cases where it would have been very useful to get rid of this trade, somewhere in the middle. That's why, those trade management rules are very useful. Also, that's why I'm not gonna close them here in the sessions. I want you to see what happened all the way to the end. So when we get in trouble, you get to see how trouble looks like. Okay, so you learn it and you don't get in trouble yourself. So exiting this trade, for half of the profit there was more efficient, because in less than half of the time you have made half of the profit. So just get out and build another iron condor. That's certainly a valid approach. But again, if you are in the trade, this is when you could go ahead and apply some of the damage control strategies and conversions, okay, where you would reconvert. For example, this iron condor could be reconverted into an iron butterfly and give yourself another chance to profit. Or if you were to lose less than what was planned originally with the original iron condor that was put in place. Okay, so again, it would be the time to do that, and you could go ahead and watch those videos. Okay, so we'll see. In any case, the market could certainly come back down. We talked about the S&P being in a climate where it's 8 out of 10. So the market may go up another 2-3 days and start crashing. Maybe tomorrow, Friday, there's a lot of profit taking and the market crashes and continues next week going down. And next thing next week we are in the range. It could very well be, especially when you look at how high that stock went. I would not be surprised to see some intense profit taking, like, for example, something like that. Okay, I would not be surprised. But again, damage control would probably be the way to go if you didn't do any trade management. Okay, and then finally we have Merck. Okay, we have Merck, which is a stock that also will have its expiration date set on October 16. I mean, not the stocks don't expire, the options trade, I mean to say. And again, we took this trade last week, 25 of September, and we are also using October 16. So as long as we are in the purple area, we are going to be fine. It's looking good with 3 UFOs below, plenty of space above, 2 UFOs above. So again, it's looking good. There is no free money or anything guaranteed in the markets. We know that very well, but certainly I would say it is looking good so far. Okay, cool. So with all of this said, we went through the introduction of the session, the review of the trades that we have, and hopefully this helps, especially now as I start planning new trades, so you understand what I'm looking for, because I'm going to start, as I said, with non-directional trades. So I'm going to be building iron condors. And again, what am I looking for? I'm looking for trade setups that allow for stocks to remain in those purple areas, those purple boxes, for a while. So we sell options, collect premium, and let time pass. And as long as they stay in that range, we keep the profits, okay? So the first one on the list, okay, as I sorted it based on the price, the first one on the list is Alibaba. So that particular stock gave us a nicely profitable trade before, but now if you look at Alibaba, and I'm going to look at a monthly time frame on Alibaba, so notice how that stock, let me delete the lines. Here we go. That's it. We got it. So notice how that stock is making all-time high. Beautiful, really, really beautiful moves in that particular stock. Okay. So what happens that if you look at the 15-5-minute time frame, no matter if you're looking at regular session data or pre and post market data, well, there are no red UFOs. So then what can you do? Well, certainly you cannot do an iron condor because you need at least 2 UFOs above red colored UFOs, and you need at least 2 UFOs below green colored UFOs. And we don't have UFOs above, given the fact that that market is making all-time high. So in other words, we may find Alibaba in the neutral long opportunities, and we do. It's right there. So you could do a credit spread on Alibaba, do a bull put spread. That you could, okay, and we could discuss that at another time. But I'm gonna go back to the non-directional list and continue to the next one on the list, which is Biogen. So what do we have with Biogen? Okay, so with Biogen, we have a stock where its earnings, I just froze the screen in the wrong location. Earnings for Biogen are happening on October 20, okay? Earnings are happening in October 20. So from now, today is October 8, so we can use next week expiration or the week after. So again, we have multiple choices when it comes to the expiration days that we want to pick. And certainly we can build an non-directional trade, at least in the theory world, given the fact that we have multiple UFOs above, which are red colored, we have multiple UFOs below, which are green colored, and very important, our UFO performance stats are above 48%, which is the minimum requirement that we use when it comes to doing the non-directional trades. Okay, we want at least 48%. So we got 53% on Biogen when looking at regular session data. If I switch to pre and post market, 53% becomes 39, and 39 is less than 48. So basically, what I'm saying is that everything that has to do with pre and post market data is to be ignored because it does not provide an edge for our trades. So I'm going to move back to regular session, and with that view, which is the regular session data in a 55-minute time frame with the UFOs in it, with performance stats which are 53%. With that view, I am now going to move into Option Station Pro, load Biogen. Okay, load Biogen. Okay, and begin the planning of the trades. Okay, and we have next Friday, which is tomorrow, is October 9. So again, it would be great to be able to do a trade with October 9, but probably you will get paid nothing, okay, because it's very close by. So in order to not to waste time, sometimes it's actually not wasted time. You do the research, and options are so overpriced that next thing you know, you do have the premium, but it doesn't look like it. Okay, notice how implied volatility is 32%. It's a bit more than October 16, but it's not like it's huge. Okay, it's not like it's I don't know why we have 84 and 90%. This is probably distorted volatility measurements given lack of liquidity. Biogen is not that liquid. Okay, so the lack of liquidity sometimes distorts the values. So again, we're gonna focus on October 16. Okay, in order to be able to do this. And what I'm gonna do in order to plan the trade is mechanically, without thinking, without biases, right click, analyze and sell an iron condor with any random strike I just clicked. Okay, it's random, totally random as of now, because the only thing I'm interested in right now is to bring an iron condor into the analysis tab with the right expiration date. Okay, I'll talk about the strikes later, so ignore the strikes for now, because now with that iron condor with the right date, what TradeStation is doing for me, it's calculating what is a one standard deviation above and below, which in this case is 274, let's call it 275 and 301. Okay, so 275 and 301, it's the statistical range where we should see that stock to trade within. Okay, so again, we said 301 and 274. So let's move this to 301, which is more or less there, and 274, which is more or less here. Okay, so this is where the price of the stock is right now. Okay, and above and below by the same amount of distance, it's 301 and 274, which represents a one standard deviation. And a one standard deviation basically represents what's likely to happen. Okay. Now, before I continue, guys, I'd like to get a little bit of feedback from you. Get a sip of water too. How is it going so far? You guys have been very quiet. I'm sure you are concentrated and listening. But again, I'd love to know how is it going on your end. Give me a little feedback, guys, please. Cool. Thank you for that. I just needed a little bit of water to be able to continue with the explanations. Cool. So what do we do now that we have the range set up? Well, the first thing that we're going to do is make sure that we have at least 2 UFOs above, which again, price is here. So that's UFO number 1, number 2, number 3. So we already have at least 3 UFOs. Okay. But of course, we want the UFO location to be beyond the dotted line. And of course, the first one is right there. So 308, 309 would set the upper part of the range for this particular trade. Okay. Now I'm going to do the same thing below. So we have 1 UFO, 2 UFOs. Okay. But so again, those 2 UFOs already qualify as the rule I want. But remember, the UFOs need to be beyond the dotted line. And of course, the one that we need is this one. Okay. Now, if I position my lines in that particular location, and then I was to measure the vertical distance from the current price to that UFO, okay, and I like to make these lines just a bit thicker so it's more visual for you guys. So this is the measurement of current price to the upper part of the range. If I was to project this below, okay, well, you notice, isn't it, that the location of 271 it's not as convenient compared to if I was to place my bottom part of the range using the next UFO that ends at 268, because now still, you know, there is a little bit of extra there, right? Meaning that price is not exactly in the midpoint. To be exactly in the midpoint, we need to rally just a little higher, okay? But, you know, I would say it's close enough, and at the same time, you know, certainly is much better than using that location. And since I do have another UFO, so that's gonna be the location for the line, okay? So this is how you would approach it when it comes to defining your range in this initial stage, okay? Now, so the question before we keep going is, okay, so we now know we're going to be selling options above 308, so how much we get paid? Because we have a rule, which is if we don't collect at least 35 cents, then we are not interested, okay? So let's go ahead and take a look to see how much we would get paid if we were to sell the 308, 309, which by the way probably will not exist, okay? It's more going to be like 310, okay? We have a problem, and the problem is big enough to totally discard the trade. So the problem is, number one, the strike price increments below, as you can see, are $2.5 at a time, which is great and convenient for position size and management of risk. But then on the upper part, above 310, is $5 at a time, which is basically double the risk that you have in the bottom part. So in other words, I won't be able to make this trade low risk. This trade will have a risk of minimum $500. And that can be taken, but the other reason why I say we're just gonna pass is because when you look at the spreads, that's not too good. But when you look at the next one, the 315, that is actually terrible. It's a terrible, terrible spread. Such a wide spread would not allow you to get out of your iron condor for a profit. When we talk about, you know, in the middle of the trade, you want to get out for half of the profit, you know, which again is an optional rule. But let's say you want to do that. Well, with such a poor liquidity, you may not get filled on the way out, and you may get completely stuck in the trade until way past that midpoint. And yeah, so those two things together are totally discouraging me from taking this trade. We had executed other trades on Biogen before. We know it's not the most liquid stock in the world. So sometimes some strikes will be okay, but not today. Okay, so what do? Well, very simple. We go for the next one, which is Teladoc Health. So let's take a look at what we have. Okay, first of all, bad news, 47%. That's not acceptable. We need at least 48. What if we move to pre and post market? It's even worse, 44.99. So again, the institutional interest, it's quite limited on that particular stock, and therefore we don't want to touch it. So we're going to move to PayPal, which is the next stock in the list, and we got 47.38 using pre and post market data. That is not good. What if we look at regular session? Well, if we look at regular session, now we are talking, because now we are dealing with 51.84%, which is certainly more than 48%. Sorry for that. I was for a minute. I'm like, what am I saying? And definitely now we have a market to work with. Of course, before we get excited, we always need to check the earnings date, which is October 21st. And being October 21st, then we are simply ready and happy to go. Okay, cool. So I meant to say that we can use the next expiration date without earnings in the middle. So that's why we are happy to go. So let's go ahead and load PayPal. And let's begin the planning of the trades using October 16. Okay. Notice in this case, we do have $2.5 strike price increments all the way to 202. Above 202, it's $5 strike price increment. So I'm not sure if we're going to be able to have a go ahead or it's going to be a no go, but let's go ahead and take a look. So I'm doing the same thing I did before. I am inserting a random iron condor just so I get the right date, and I can get the standard deviation measurements above and below, one standard deviation above, one standard deviation below. which are pointing at 204 and 183. So let's go back to the chart to see where is 204. 204 is right there, and 183 is right here. Okay, so maybe I should zoom in a little bit. Okay, I guess that would be better in this case. So current price is here. Okay, statistics suggest that the price of the stock will remain trading until October 16 between 204 and 183. So the idea again is to have at least 2 UFOs above and 2 UFOs below to protect ourselves. So on the top, I guess I attempted this trade before and I already got a line pointing at the upper UFO. So that's fine. On the bottom part, and it's fine because I got 1 and 2 UFOs, red color UFOs, I got 2. And if I point at the bottom part, I got 1, 2, and 3. And the next one in the list would be here. So that's where my line would go, right? Now, again, I'm not fully centered if I do it this way. So I'm going to have to adjust this, and to do it, we use a vertical line. Okay, so vertical line, let's change the weight to thick. Okay, I'm going to move it to the downside. And if we were to do that, I think you are with me that the best appropriate location would be to point at 174, which, has a little extra wiggle room there, but certainly that makes the price of the stock to be as centered as possible. So we are planning on an iron condor for PayPal, expecting the stock to remain range bound between 211 to 174. That's the plan. Okay, now the question of, as always, is are we going to get paid enough with the 211? And to be honest, I'm not sure. And also, I'm quite unhappy to see 211 because I remember when I looked at the option chain that above 202.5, the strike price increments happen to be $5 at a time. So in other words, if I was to do 210, liquidity is good. If I was to do 220, liquidity is good. So I could do that. But notice the spread in here. Okay, the strike price increments are $10 at a time at this level. So the risk of this trade, I cannot help it, but this trade would have a risk of $1,000 minimum, because it's $10 times 100, that's $1,000 risk. So again, probably it's a bit too large. I believe we should be able to find trades with a more contained risk and more efficient execution. And you could say, what about going to the next expiration date? Well, you cannot, because earnings are happening on October 21st. So then I cannot use the next expiration date, and therefore I'm stuck with PayPal. So we'll move to TIM and see if a trade is available. Okay, so with TIM, when looking at regular session data, we got 48%. That's acceptable. When looking at pre and post market, we got 40%. That is not acceptable. So regular session is the only thing we can trade. But again, notice we don't see red UFOs. So the question is, let's check the monthly time frame, and are we making all-time highs? Yes or no? And we are. So like we had a case earlier with Alibaba, I believe it was, we don't have red UFOs above, and therefore we need to pass. So we're gonna move to Etsy, which is an opportunity pending data, PD. So we're just waiting. Thank you for your feedback before, guys. By the way, I didn't say it, but of course I read you, even though I just kept going. So we got 50% UFO performance that was Etsy. That's fine. If we look at pre and post market, we have 39. That is not acceptable. So we discard pre and post market. But again, we don't see red UFOs above. So let's move to monthly. And again, another stock making all-time high. So we're gonna do it. So we move to IBM. Okay, moving to IBM. IBM is not making all-time high. Okay, it's not making all-time high. So I am moving to the 55-minute time frame here. Major gap there on IBM. I'm wondering why is that. There may be a very important reason there for that to happen. Notice how beautiful that UFO worked, making the price of IBM to fall. But notice how, believe it or not, institutional interest in IBM at this moment in time is quite limited. 46.87% during the regular session hours. It's deceiving, to be honest. What about pre-post market? It's 40%. Is even worse. So it seems that while there have been a large gap, and who knows the reason behind it, and certainly price moved up aggressively from 120 something to 130 something, which is nice. The reality is that we don't see evidence of massive, or I should say enough institutional interest for us to have a bet on that stock, and therefore I'm just going to pass. The next one in the list is Tiffany's. Okay, we're getting many no-goes. Okay, many no-goes in that particular case. So we'll just keep going, guys, applying the rules. So we have Tiffany's. Okay, Tiffany's with a fantastic, amazing performance stat, 61%. That's not common in stocks, because that's powerful. 44% pre-post market, so we ignore that. We'll focus on the regular session. And the next earnings for Tiffany's are happening in December. So we got plenty of dates for us to work with. Okay. Now, I do want to check Tiffany's before we get into more chart analysis, because while this is a stock I have traded many times in my life as a trader, in earliest part of this year, even ending part of 2019, I've seen a massive lack of liquidity on Tiffany's that I could not explain. So I want to check if we are still dealing with that situation. And yes, we are still dealing with that situation. So really, I don't know what's going on with that stock. I just cannot explain why we have such a major lack of liquidity, with the bid being 5 cents, the ask being 4.40. So again, market makers observe a massive monumental risk on executing trades for that stock. Basically, almost everything is executed on one strike only. That's kind of like the only strike with liquidity. So it's a very weird option chain. And my friends, a rule in trading is when you don't know why something is happening, when you cannot explain why something is happening, and you don't know, and let's face it, there are many things we don't know in trading, because we are not Citibank, we are not Goldman Sachs, we are not Bank of America, so we are not Deutsche Bank or Alibaba. So then we just pass, okay, and we go for the next trade. We don't want to get ourselves into a trade where something major may happen against us and we don't even know why. Okay. So looking at XLNX, that one has 48%, so that's fine. Only one red UFO there, so a bit of concern. What about pre-post market? Pre-post market has more UFOs, but only 39, so that will not be acceptable. Well, we're getting many no's today, guys, and I'm just looking at the time. We've got 10 minutes left, so I really look forward to find a few more trades. Well, good news, XLNX is not making all-time high, so I guess if I load data all the way to March 19, okay, so in the 55-minute time frame, if I load data all the way to first date, March 2019, this will take a little bit of time, but this should uncover UFOs above. Okay, so you can see pending data PDE, so the data is being downloaded. I'll take a sip of water if you don't mind, and this should uncover new UFOs. So let's take a look. Do we have more UFOs above? Yes, we do. So that's nice. Okay, that's nice. We have UFOs above, we have UFOs below. Performance stats are 50%, which is more than 48, and therefore we have something to work with. Earnings are October 21st. Not sure why I said August. And therefore, we are allowed to use the next expiration date on XLNX, which is October 16. Okay, so let's go ahead and look at that expiration date. Strike price increments are $1 at a time, so I guess it's fine. Okay, now I am concerned about how much premium we may get, given the fact that those UFOs above are very far. Especially, we need 2, right? So this is number 1, this is number 2. So we're gonna have to use the 117, 118. So let's see how much we get paid for that, and we have the same problem we saw before. Above 115. We switch from one strike price dollar increment to $1 strike price increment to $5 strike price dollar increment, and that is a big problem. Plus liquidity is now terrible. So no trade on XLNX. Hey, what's going on today? We got too many no's, isn't it? FISV, I'm gonna skip it because we have a trade running, so I'm gonna move into JP Morgan. 48% UFO performance stats. We got multiple UFOs above, multiple UFOs below. So all of this is good. I just want to go back to my normal settings, and also, wait a minute, with my normal settings we got 44%. So in recent times we had a drop in institutional interest. What about pre-post market? Same with pre-post market. So we are not gonna do JP Morgan. What about AMD? So AMD providing 50%, that's good. With pre-post market, what about regular session? Providing 53, that's good as well. And let me take a look at where we are in the monthly time frames. Yeah, so we are about to make all-time high, but we do have two red UFOs because we have the UFOs from the regular session data, and also from the pre and post market session we also have two. We have two here. So in other words, I do have my UFOs. Okay, so that's actually a good news. Earnings are on October 21st, so we need to do this trade on AMD using October 16th. Okay, so let's go for it, and let's begin the planning with AMD using October 16. Here we go. Right click, analyze and sell, an iron condor, and same story. We're gonna point at one standard deviation above and one standard deviation below. Okay, so here is the expiration date, one standard deviation above and below, and that's 96 and 80. Okay, so 96 and 80, this is the statistical range. So let's go ahead and draw the line. So we have a problem. Did I say 96? Yes, I said 96. Yeah, 96 is above my UFOs. Okay, so then no trade with AMD. Hey, what's happening today? Mr. Market, just make it easier for us. Come on. Next stock in the list is ATVI. We got 43% using pre and post market data. So we'll move to regular session data, which provides a much better performance. That's 53%. Certainly that should be a valid setup with UFOs above and below, and therefore we're going to move into planning on a trade. Here we got a bit more freedom for expiration dates because earnings are on November 5. So being November 5 gives us a little bit more, breathing space here. Okay, so we are going to load ATVI. Let's see if this is the trade. Okay, let's see if this is the trade. And I am certainly eager to have a trade after so much analysis. So ATVI looking at October 16. We're going to right click to analyze and sell an iron condor. Okay, plus and minus one standard deviation are pointing at 82 and 74. So let's go ahead and draw 82 and 74. 82 is somewhere here. 74 is somewhere here. And therefore, if I was to look at a UFO below my dotted line is there, and if I was to look at a UFO above my dotted line is there, correct? So that is if I'm looking at a regular session, again, pre and post market. Oh yeah, we said to discard pre and post market. I forgot that. So yeah, so that could be the location for my lines. Let me make the screen a bit larger and move it up. Here we go. So of course we have this other very near UFO. So current price is here. So if I calculate the distance to the bottom UFO, okay, vertical distance is of that size. And if I was to take that line that represents the distance and I project it above, so it's kind of looking like the next UFO probably is a better choice. Okay, it doesn't mean I cannot use the other one. It's kind of like it's almost the same really. So you could certainly use the other one. So it's in between 82.7 or 83.5. Probably I'll end up using 82.7 because probably in the option chain I'll be provided $2.5 strike price increments. So I'll be able to use 82.5. Probably, I'm just guessing. So let's go ahead and move to the option chain and see if that's available. Actually, I have 82.5 and I do have 83 too. Okay, so I have both, and they both seem to be okay liquid. Okay, they both seem to be okay liquid. Now, while they both seem to be okay liquid, I'm very concerned about that because my rule, our rule, right, is to only sell options when they provide at least 35 cents, and that's 26 or 22, which is not 35. So again, if I was to do 82.5 and I get 26 cents, in the bottom part, if I do 72.5, how much I get paid? So the 72.5 pays me even less, which is 16, and certainly that's too little premium to accept the trade. Now, the good news is that with that stock, we can move into the next expiration date, which is the 23rd of October. We could do that because remember, earnings are happening in November, so we could do that. So let's move our analysis from 16th of October to 23. Okay, and I'm going to have to reinsert the Iron Condor because some strikes are not available. So let's do it here. Analyze and sell. An Iron Condor. 1, 2, 3. We got it. Here we go. So we got 23 of October, and now our stats are 83 something to 73. So let's rectify this. Okay, so 73 is more or less here. 83 something is somewhere there. So in other words, now this line will not work anymore, and you know, yeah. So this setup would work actually. Okay, that particular setup would work. I'm just curious to see how far the other UFOs are. So the other UFOs are very far. So if I was to point at those, we're talking about 87. So you know, how much, out of curiosity, how much I get paid for the 87? Yeah, so it's going to be very little money. The 85 is paying 22, so the 87 even less. So yeah, so the setup that we're going to employ is that setup. Okay, it's a setup where we are going to rely against those UFOs, 72, 78, and 83, 80 something, and 83.5, which is right here, does provide 40 cents, which is 35 or more. Okay, and the bottom part, which is 72.5, provides us with 72 provides us with 38, which is also 35 or more. So my friends, it does seem that we have a potential opportunity to do a trade with ATVI. Let's see if we could confirm the validity of this trade. So we're going to be buying a call above, or calls if you use multiple contracts. We're going to be selling a call above, and then all the way in the bottom part we're going to be selling a put below, and then we're going to be buying a put below. So now in the middle of the range, I'm going to write the expiration date, which as of now we have selected October 23, 2020. That's the expiration date. And earnings seem to be happening. Sorry for that, my friends. Hopefully I was quick enough with the microphone. I just had to sneeze. It was just a surprise. So earnings seems to be November 5, 2020. Okay, so that would be the plan for this trade. So the put to be sold, if we look at the bottom part, I'll start with the upper part. So 83.5, let me see. We got 83.5. Yeah, so we can do 83.5. Yeah, everything seems to be good. So 83.5 to 84.5. So we'll do that. So 84.5, 83.5. And in the bottom part, I guess that in a perfect world, I would do 72.5. Okay, and 71.5. But if I don't mistake, those strikes don't exist. So let's see what's available. So on the bottom part, yes, I don't have that. So I have 72 and 70, which is $2 of risk. Okay, I could do 73 and 72. That would be $1 of risk. So if I do 73, is that a crazy thing? Well, no, it's not, because that's 70 to 78. So let's do that. That's going to be a more contained way to approach risk. So it's going to be 73 and 72, and because I'm coming just a bit closer to the line, so I'm going to do the same thing above, which is I'm going to use 83, 84. Okay, that way it's going to be just a bit more aggressive, but also better balanced. So 84, 83 is the upper side of the condor. 84, 83, and the bottom part of the condor is going to be 73, 72, which is like that. Okay, so if we do this trade, do we have permission to do it? The answer is yes. Okay, now let me explain why. So what is the risk of the trade? $1. right? The distance between strikes is $1. So the raw risk of the trade is $1 times 100 is $100 per contract. Okay. So what is the rule we use? Well, let me rephrase that. The rule we use is that we want the premium collected by selling the condor to be at least 15% of the raw risk. Okay, being the raw risk $1. So how much is 15% of $1? Is 15 cents. And how much is the midpoint? 25. So do you get what you want? Yes. So are we allowed to do this trade? Well, based on the rules, we are. Of course, you taking the trade is your decision with real money, paper money, larger size or smaller size. But certainly the rules are met for this trade to be executed. So let me illustrate graphically a bit better this trade. So we are entering the trade as of today. Expiration date, it's October 23, right there. So basically, our bet in this particular trade is for the stock to remain between the lines, both horizontal and vertical lines. In other words, for the stock to remain in the purple area from now until October 23, right? So let's go ahead and do this trade. Okay, let's go ahead and do this trade. So you would go ahead and click trade. Okay. Of course, never use a limit, never use a market order to do this. Okay, use a limit order, and it's a good practice to start with the midpoint, which is 25. So you may want to place the order in there and just wait for a little bit, okay, and see what's going to happen. Okay, so I'm just going to place the order. If you don't get filled in a few minutes, certainly you can rectify the price. Instead of 25 cents, maybe you try 23 cents. If you don't get filled, you may try 21 cents. And you should get filled at some point, and certainly above 15 cents. Below, you will not want that. Okay. Anyway, with all of that said, my friends, the trade is in. The opportunity has been identified. So we're gonna say goodbye. I'm just typing the symbol there so we can review it in future sessions. How was the session, everybody? A little bit of feedback. Everybody good? You've been quite quiet today. Which I guess is a good thing. If you don't have no questions, I guess you are following. At the same time, it always gives me the concern that some of you, especially if you are newer to what we do in the channel, you may be a little bit shy to interact and ask questions, or maybe you don't know if you are if it's okay for you to participate or not. And for sure, it's okay for you to participate. So I'd love to get a little bit of feedback from you guys. To confirm that you followed, and if maybe you are busy placing the order, I will understand that too. Okay, so we'll conclude the session in just a sec as I read your feedback, and then that's it. We'll call it a day. Okay, so it seems that all is good. Very good, everybody. So very nice. Thank you for joining me as always, everyone. Big hug out there, my friends. You guys stay safe. Apart from safe in the market, stay healthy. The world is crazy, and certainly many countries are experimenting peaks that no one is calling a second wave. But when I see the charts as a trader, to me, it's a second wave. So just stay healthy in most of the countries out there in the world, because there is risk, and so make sure that you and your families are going to be okay, guys. If you are okay, you are also helping people around you to be okay. So take care of yourself, because you are taking care of others by doing so. Take care, everybody. See you soon. Bye-bye.